Okay, you gotta be kidding me. Something is not adding up with Tesla's stock right now. GM says they expect to sell between 200 and 300,000 EV units this year. This is either going to age like a salad left on the counter, or Tesla totally sandbagged expectations for their 2024 numbers. That's because GM only sold 75,882 EVs in 2023. So if GM is correct on the low side of this guidance, that would be 163% year-over-year growth. If GM actually does sell on the high side 300,000 EVs in 2024, that would be 294% year-over-year growth. Now let's just go ahead and put this into a little bit of context. If we divide for the size difference in GM and Tesla, just by simply saying, hey, if GM can sell 200,000 deliveries, Tesla should, let's say, 2 million deliveries, well, that would imply around 16.3% growth for Tesla's stock in 2024. Here's where things get a little bit crazy. On the higher end side, if GM comes through with 294% growth, extrapolating what these numbers could look like for Tesla, just taking the percentage change and divide that by how many more vehicles Tesla sold than GM EVs, that is, of course, that could imply 29.4% growth for Tesla in 2024. Here's where my brain kind of spins a little bit more, because Tesla sold 23.6x more EVs than GM in 2023. If GM does sell 300,000 deliveries and Tesla comes in at, let's say, 2.1 million, that means Tesla will only sell 7 times as many EVs as GM in 2024. So in simple terms, this is either going to age like spoiled milk for GM, or Tesla sandbagged their numbers. I don't know why I'm going with the food analogies, but just bear with me. The reason why I think this is significant to point out is, number one, mainstream media has been all over Tesla and really other EV makers as well. The EV demand is slowing down. In fact, if you look at GM, they are saying quite the opposite. But they're not going to say that GM's lying, that GM's demand is slowing down. They're going to point out Tesla. They're going to point the finger at Tesla and say it's a Tesla demand problem. That's probably because GM advertises a lot with mainstream media, so there's probably some kind of financial incentive there. But it really makes you wonder, if nobody's going to push back on GM calling for hundreds of % growth in 2024, then should everyone be so negative on Tesla? I mean, sure, Tesla did not provide guidance, but I don't know what the year is going to look like 2 weeks into a new year. Nobody knows that. And to accurately try to forecast that would be a fool's move. What we have seen so far in 2024 gives us reason to believe that we're going to see some good numbers. We are seeing near records in China already, and January and February are pretty slow seasons for vehicle sales overall, so that looks good. And Europe, we literally just broke a new record. The best month ever for EV sales was January. Even just beyond that, your legacy automakers, they've all given you really good guidance and said, hey, 2024 should be a great year for vehicle sales. I find it very hard to believe that Tesla's going to do terrible and all of these other companies are going to do great. That's why I think we need to discuss this, because Tesla has seen their estimates fall from about 20% growth in 2024, deliveries to be anywhere between 2.1 to 2.2 million vehicles. Now, most of Wall Street is expecting 10% or less for Tesla's growth. That, I think, potentially gives us upside in just the car business, let alone energy, let alone any of the other businesses that are firing with all cylinders that Tesla also operates. And it's pretty clear you can see that reflected in Tesla stock. Tesla stock is priced for very low growth, maybe even no growth in 2024, and it's also priced for potentially further weakening of margins, which that's another point I would like to bring up. Tesla has recently looked into laying off some of their unneeded staff. I know morally that sucks, and I wish we didn't have to do that, but all companies are doing that. But Tesla's turn, maybe that could get the stock some love. At the very least, that should make Tesla more profitable in the second half of 2024, which that is 100% not priced into Tesla stock. Just the thought that Tesla could be more profitable in 2024, that's a home run for Tesla at this point. You've also seen Tesla come out with different things that are just overall a little bit different, like the temporary Model Y price cut. Normally in the past, Tesla just cut prices, no shame in their game. This time it was a like 4-week temporary price cut, and I think that shows a little bit more diligence to what the markets want out of Tesla, that cutting prices is not the best way to go. So if you mix these things together, and Wall Street having very low expectations for Tesla on one hand, and then you have Tesla over here saying, hey, we're going to focus on profitability a little bit more. Of course, I'm reading between the lines, but I think Tesla focusing on profitability more will become more obvious as we get into next quarter and the quarter after that. Both of these things mixed together, throw them together, that's a recipe for some gains in Tesla stock. I was going to hit you with another food analogy, but I guess I'll save that one for later. The next thing that I would like to share with you is also something that is not in any way, shape, or form priced into Tesla stock as even a possibility of happening. And that is the Cybertruck halo effect. See, the Cybertruck is such a captivating product that typically companies have to pay quote unquote celebrities tens of millions of dollars sometimes to promote their products, if not at the bare minimum hundreds of thousands of dollars, depending on obviously what kind of celebrity you're dealing with and how many followers, their fan base, so on and so forth. The Cybertruck is getting all of that for free. Here's a new video put out by Bad Bunny on his social platforms with tens of millions of followers. The Cybertruck is so captivating, Tesla doesn't even have to pay for them to promote the Cybertruck. It just gets you more cred if you promote this unique, weird looking, cool truck. And as I reported yesterday, Kim Kardashian posted the Cybertruck with a caption, "Cool Carpool Mom," on her Instagram account with over 360 million followers. Now, as I pointed out yesterday, Kim Kardashian followers are probably not your typical Cybertruck buyers. Let's be honest there. Sure, they can be, of course, but it's not the demographic per se that would be interested in a Cybertruck. But that gets people talking to their boyfriends, their husbands, their family about this weird new truck that's out if they've seen it or heard of it. And that gets word of mouth flowing by the millions. I mean, let's just say 1% of everyone that watched or seen this post from Kim Kardashian says to one more person, look at this truck. Well, 1% of Kim Kardashian's following on Instagram is about 3.6 million followers. Times that by 2, you're looking at over 7 million people that may have just seen the Cybertruck for the first time, that I could infer here potentially would be buyers of the Cybertruck. Now, if you take a look at Google Trends data for the Cybertruck, you really tend to see spikes around events. This is over the past 12 months. You get things that are said about the Cybertruck, new details come out, and then boom, you got the actual launch, the delivery event here in November and December. What happened? Search trend activity spiked. I want to point this out because a lot of this was probably investors. Let's be honest, probably Tesla enthusiasts and investors. It was this, because average people had no idea about the Cybertruck. Dwayne Johnson, The Rock, had no idea about the Cybertruck until like a month before it launched when he went on Joe Rogan's podcast, just to put that into a little bit of perspective. At this point, it's highly likely that you and I are not searching about the Cybertruck all day, every day, or even, as nearly as much as before. You know about the Cybertruck. You know the product. You've probably looked at the specs 100 times by now. Probably decided whether or not you want to get one. You are now seeing a substantial ramp in the Cybertruck. From midpoint in January, roughly, you hit 16, 17 on your Google Trends, which was about where you were in October and November of 2023, before the thing actually launched to the public, before you seen this big spike, back to kind of a normal trend for the Cybertruck. What has happened? You have started to ramp big time. You're now at 34, and this data is incomplete. So by the time we get that complete data, I'm sure it goes even higher than this. So this, to me, this spike is likely non-Tesla owners today. That would be my number one inference there. But likely not Tesla investors as well. This is likely organic search trend activity for the Cybertruck. Now, obviously, there is an extended wait time for the lower price Cybertruck. The Cybertruck, the masses could adopt a little more easily. The $60,000 or so Cybertruck, people that can't afford the higher end one may go out and do that. But this can also help boost the other Tesla products. And lo and behold, that looks like it's happening as well. Not as much right now on the Model 3. The Model 3 did see a slight uptick from 34 to 35. The Model Y went from 35 to 38. The Cybertruck, again, went to 34. The Cybertruck is almost more talked about than the Model 3 and the Model Y, or searched about, if you will, than the Model 3 and the Model Y. That's kind of insane in and of itself. Even the Model X has went from, 8-ish to 10 now in your Google Trends. You're starting to see a rise in activity here across the Tesla lineup. But I do want to caution you, because any halo effect we have seen from other Tesla products in the past, they take a considerable amount of time. So normally, by the time you're like, we're really seeing a halo effect, the Cybertruck is really helping the Tesla brand out, you usually need to see like 50,000 deliveries or so, or like 12 months of the product being out. If the Cybertruck launched in November, then it's pretty safe to say by late summer, by October, November of 2024, we will know for certain how strong the halo effect is for Tesla. But again, I don't think this is priced into Tesla at all. The possibility of seeing a halo effect, but even more importantly, the possibility that the Cybertruck could ramp faster than expected. See, Elon made it very clear today. Elon said today that I also reported on. In regards to Rivian and Rivian's cash diminishing, Elon said that Rivian will run out of cash roughly in about 6 quarters. Here's the important part in context to what I'm saying. Elon says, quote, "Their product design is not bad, but the actual hard part of making a car company work is achieving volume production with positive cash flow. So if the Cybertruck ramps faster than expected, that will be less of a hit to profitability for Tesla. So more Cybertrucks produced, more Cybertrucks sold. There's no problem there with selling Cybertrucks. So the demand there is, I don't want to say unlimited, but let's say roughly 1 million vehicles or so that will likely convert into sales. So there's a couple of years worth as of right now, just in backlogs of vehicles that need to be delivered. But if they can ramp that quicker, less of a hit to profitability, more EPS, lower valuation today for Tesla stock. Again, that is something that is not priced into Tesla stock today. Because let's be honest, whether you have been in the markets a year or 15 or 20 years, you should know by now, hopefully, if not, you're about to learn, in the short term, It's all about what's priced in and what's not priced in. If expectations are really high and a company really under-delivers and really is, not meeting those expectations, the stock's likely to fall and you're going to get a better deal on the stock in the short term. If expectations are really low and a company even meets expectations, most of the time, I would say about 75% of the time, as long as it's not a cyclical downturn or shift in the company's fundamentals, then just meeting expectations is enough to send the stock higher. That's why a lot of the time you see stocks and companies come out with bad earnings and go higher. I mean, it's just simple. It could have been worse. That mentality likes to kick in when things are really bad. Now, if your expectations are low and things go good for you, that's where you get a Meta-like result. Over the past 18 months, Meta has went from $88 to about $500 today. That's because expectations were at rock bottom and the company started to become a lot more profitable than people thought. I don't know if Tesla's going to pull a Meta here, but my point is expectations are very low and Tesla should at least come in at that midpoint. I don't know if they're going to be knock your socks off fantastic, but I don't think they're going to be at this low point. If you've seen what Adam Jonas has recently just put out, this will make a lot of sense to you as well. I mean, you should be able to tell just where expectations are by looking at Tesla stock and Tesla being the worst performer in the S&P 500 for the start of 2024. But let me provide even more context. Morgan Stanley's Adam Jonas released a new Tesla note about 3 days ago. He says Tesla sentiment check. Can bearish be bullish? Bears outnumber bulls by over 2-to-1. He says, following our recent Tesla bull bear lunch, we distributed an online 3-question survey to our research distribution post close on February 15th. 60% of survey respondents expect Tesla shares to underperform the S&P 500 through year end, while 26% expect Tesla shares to outperform. What's also interesting is they did this survey on February 15th, and that was the best day for Tesla stock in many, many months. Tesla stock was up 6.22% this day, and people's sentiment changes with the wind, can change second by second, which I'm sure that did marginally skew the numbers even more towards the bullish side. So maybe if it had been done previously, it would have been a little bit more bearish. But still, 60% of respondents expected Tesla shares to underperform and 26% expected Tesla shares to outperform. If you did this on, let's say, Nvidia right now, you would get like 98% of people expect Nvidia to outperform, 2% expect it to underperform. Now, he goes on to say that bearish respondents outnumbered bullish respondents by more than 2-to-1. In addition, 75% of survey respondents believe Tesla shares have yet to bottom this year. More selling to go. We were down, what, 26% at one point? The worst performer in the S&P 500 to start 2024? And 75% of people still think that wasn't the bottom. Woohoo! That's about as bearish as it gets, my friends. It says, with 27% of respondents expecting shares to bottom at or below $100. 50% below the current share price. 27% of these institutional investors expect Tesla stock to fall another 50%. I'll just tell you right now, as simply as I can put it, it does not get more bearish than that. Not for a company like Tesla that is in a cyclical growth sector. It's not like EVs are going to fail. We're past that point. It's going to grow. 100 years from now, people are not even going to know what an internal combustion engine vehicle is. And this, less than 1 in 4 of those surveyed see Tesla as a good way to play the AI theme. Bearish Tesla is also reflected on the thematic side, with less than 1 in 4 surveyed believing Tesla is a good way to gain AI exposure in their portfolios. From our recent conversations with investors, Elon Musk is seen as making some effort to distance Tesla from the AI theme for 2024, allowing investors to focus on the deteriorating EV demand narrative. So what a lot of people think is Tesla has distance itself from the AI theme. It doesn't want to be associated with AI, like it's revolting against AI or some kind of crazy fallacy. But that's indeed not true. What Tesla is actually doing, in my opinion, in regards to AI, is I think Elon realizes the markets right now, they're not in a place to focus on real world AI. It's the GPU guys, the hardware of AI, that is having their turn right now. Tesla doesn't want to overpromise and underdeliver. That's a problem. That's kind of like the expectation kind of bar weird analogy I did with my hands. You don't want to be up here with your expectations and come in with results that are down here. You want to be down here with your results and come in here, or come in here, or even come in here. If you don't promise anything and you don't deliver anything, no harm, no foul. If you promise a lot and you underdeliver a lot, this is not the market for that kind of behavior. That was 2021. You could promise, you could say whatever the hell you wanted, and your stock would do well because it was a low interest rate environment. There was no other alternative. It was called TINA. Because bonds were paying you like nothing. You had to put your money into stocks essentially. So companies were getting rewarded for saying whatever the hell they wanted, giving whatever timeline they wanted, not being profitable, didn't matter. That's not 2024. I will say it again, just for all intents and purposes, you cannot overpromise and underdeliver in this market, or your stock is screwed-zoed. I mean, even when the EV business is not gangbusters like it maybe was in 2021 and 2022, based primarily on interest rates being where they are, you really can't be making huge promises in this market, long story short. But let's be honest, I plan on making a more in-depth video on this, going over some numbers, my expectations, projections on how long it'll take for the market to essentially realize Tesla is the best AI play out there. That's not because I love Tesla. That's just because that's the fact. When I think about any investment it is, because I own other investments as well, right? Rental properties, other stocks, different things here and there. I want to think of things in terms of TAM, total addressable market. You get really rich by solving a problem for a lot of people. Amazon, even Meta, Tesla, they solve problems for a lot of people. Well, same thing with AI. If AI adds to someone's life, it adds to humanity in a positive way, and a lot of people can benefit from it, you will monetize that. That's the bottom line to it. I can't think of another company that has more people that could benefit from their AI than Tesla. I mean, if your car could drive for you, save 50,000 plus lives a year, and, free up your time to do whatever the hell else you wanted to in the car, obviously when you would prefer not to drive, then that's applicable to basically every human in the world that drives a car. And the world is only becoming more developed, so over time, this total addressable market will grow even more. But then you have the humanoid and or robots. I know humanoid robots may not be as applicable than just normal robots. I think I would feel more comfortable with a odd looking kind of oval shaped robot thing. Give me an oval shaped kind of tower that looks like this can of formula, but like rounded off. That's like maybe like 4 or 5 feet tall. I would feel a lot more comfortable with that than a humanoid robot. So I mean robotics in general. It doesn't have to be humanoid robots for that matter, but functional, purposeful robots that, let's say, could take care of you when you're sick, take care of your family member when they have dementia and they're 86 and can't do anything for themselves anymore. That was my great-grandma 2 years ago. I mean, all of these things, there's many other applicable points. Clean your house, vacuum, all that stuff would obviously be great too. Rake up the leaves. Who likes raking leaves? I mean, I have much better things to do with my time, literally anything else, than do that. That's the point. That could literally be applicable to every other human in the world as well. I can't think of any other company that has that much TAM, total addressable market. That's what TAM stands for, if you guys don't know that by now. I have a hard time beating that. Now, the question really is, when do the markets start to assign more value to this? I want to be clear. I don't think AI in general is a bubble. I think we're past the bubble point. There's actual functionality here, but I do think it's going in stages. I do think right now it's the hardware, like Nvidia, AMD. These are not software plays. I hate when people even make that reference. This is the hardware that companies will use to develop AI, and specifically real world AI. Palantir, Microsoft Copilot AI, these things are great for the corporate world. You're only going to do so well in the corporate world because the vast majority of people are working everyday people that, you know, you want to be able to provide products and services that will appeal to them. Palantir, you know, Microsoft Copilot AI, these things are not going to apply to them. Even large language models to a certain extent, a lot of people just are not in a place to even use that on a large functional scale. Your grandma's probably not going to use a large language model, but she might use a robot to help her around the house. That's what I'm saying here. Now, as far as when the markets are actually going to realize this, I think a couple things probably need to happen first. Number one, rates go lower. It's hard to assign value on things that are down the line, even if they're 2 years down the line, which a robotaxi network very well could be 2 years down the line. Let's also make a point to point this out. Optimus and FSD have improved multitudes of themselves over the past even 12 months. Things have gotten a lot better in both of those fields. Again, Tesla, Elon, they have not promised this, so you have not gotten those short-term gains that some investors would have liked to see by now, and maybe a little bit of balance between, you know, promising and maybe not too promising, not being too overly optimistic would be a good balance right now. But you can make that argument. I might make that argument in another video, but nonetheless, you probably need to see rates coming down to assign more value to this, because when you got 5% yielding T-bills out there, it's really, really hard for investors to wrap their minds around something that may or may not happen down the line. Now, I think at this point, Optimus and FSD, they're more reality than concept because they're actually like here. I mean, the robot can literally fold t-shirts. It's probably not going to take too long for the robot to be able to do functional things, to actually have a functional purpose, probably in the corporate world first, maybe warehouses, things like that. But you could start to see how that could develop into other variations and other different products. So I think interest rates are the big one, because right now you have $6.3 trillion in money market funds, and investors are not in a rush to put that money back into stocks anytime soon. As far as the markets are pricing in right now, we're going to get the first rate cut in May or June. You could also make the argument the economy's probably not going to get better here. It looks like you're at peak economic cycle. We're probably not going to get a recession in 2024. It's a toss-up whether or not we'll get a recession in 2025. I think we'll probably skate by with no recession, but it's going to get dicey at some point. So when the Fed really does reduce rates, that's when I expect the AI kind of nature of Tesla's business will start to show through a lot more. Then at that point, when rates are lower and more money is flowing into our markets, let's just put this into context. $6.3 trillion is about 3 times the entire index market capitalization of the Russell 2000. So you have 3 times the Russell 2000 sitting in T-bills outside our markets, let alone cash, let alone other alternative assets. There's a lot of money out there. So that's at the point where Tesla can start to hype up some of their AI endeavors. They can, and that would make sense to do so. Maybe not hype up, but just talk about them. Tesla doesn't even talk about their AI anymore. And it makes sense, hopefully, to you when I put it into this context. Again, markets want profitability. Markets want results right now. There is no room for overpromising and under-delivering. That's exactly why Tesla did not provide guidance. I believe they sandbagged their guidance, and I believe they have been sandbagging their AI endeavors, which ultimately is good for you, because you, if you're watching this video, and especially if you're watching all of this video, you got a huge heads up before Wall Street ever figures it out. I am 100% confident I am not wrong in what I'm saying in this video. I don't think that I am being unrealistic with Tesla at all in this degree. When it happens, how long it takes, those are toss-up questions. It could be 20 years, and I will still say I am right about this video because it did happen. I think it's going to happen. I don't know when it's going to happen, but I think it's going to happen. With that being said, nothing is 100% a guarantee ever, and you can lose all of your money if you listen to someone like me, someone like you, on the internet. Your friends, your family, your foes, your pals, doesn't matter. You don't listen to anyone when you make investment decisions. You bring in a lot of different opinions, and what makes sense to you, you ride with it. That's all you could do. Thank you for watching, guys. Hopefully you learned something out of this video. If you did, drop that big fat like on the video. Subscribe to the channel if this is your first time here, especially. This is a channel you don't want to miss if you are a Tesla bull or if you are an investor in our markets. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. We have been hitting some home run trades over there. Couple losers here and there as well, as always, but some big trades. $60 into $2,400 up to $4,000. That was yesterday with Palo Alto. Just one put did that. That was a monster trade. And then you had Square earnings today. Bought 100 shares, $1,000 of profits. But there has been some losers as well. If you guys want to come join, check it out. Link down below in the description of this video. Nonetheless, you guys enjoy the rest of your day, and I will see you in the next one. Oh, and those SMCI puts, when that thing fell 20%, those were wicked.